Welcome back to the channel, fellow traders and crypto enthusiasts. Today I have got an exciting and surgical breakdown of Bitcoin's latest price action, a move so precise it almost felt like we sniped the bottom to the exact dollar. We are going to look at the key support and resistance levels, the role of volume, short-term and mid-term targets, and the bigger picture for August. So buckle up, this is going to be a sharp and insightful analysis. Let's start with what I like to call another sniper precision moment. A few days ago, I marked a key dip for zone for Bitcoin at exactly 115.7k, and that's exactly what it hit yesterday. If you can see on the top, the low was 115.7k. I didn't just mention it vaguely, I wrote it down. I shared it with conviction, and guess what? Bitcoin dipped exactly at 115.7k. Not 115.8, not 115.65, but exact 115.7. That level wasn't chosen randomly. It was based on a confluence of price structure, support levels, and historical liquidity zones. When price hits your mark to the dollar, that tells you that the market respected your level, and more importantly, it tells other traders that you're not just guessing, you're reading the tape. Now let's move on to the daily chart. Here it is. So now after hitting the precise dip, Bitcoin has bounced back and is now trading above daily 20 SMA, a simple moving average that acts as dynamic support and resistance. Currently, it has dipped a bit, but it has been trading above 20 SMA. So why is that significant? Because when price reclaims the 20 SMA after a breakdown, it often signals a shift in short-term momentum. Bulls are stepping back in, and while the weekly chart still looks a bit red and choppy, the reclaim of 20 SMA daily combined with something else I noticed is giving me bullish vibes. So let's see the volume on the dip right here. So the volume on the dip to 115.7k was very impressive. As you can see, there's a big volume spike during that dip. Sometimes it's not just about what the price does, it's about how the market behaves when price hits certain levels. The strong surge in volume on the dip suggests heavy buying interest, possibly smart money stepping in. Even if the price looks bearish on the surface, volume is often the hidden heartbeat of the market, and when that heartbeat is pumping hard during a dip, it tells me the buyers are alive and well. That's why I said this volume gives me more confidence than the price itself. Looking ahead in the short term, if we see 1 hour chart, or let's go to the 4 hour chart here. So currently I am expecting a possible dip towards 117.2 right here somewhere, 117.2 to 117.3 area. But let me be clear, this isn't a must happen situation. It's a potential retrace level, not a guaranteed move. But I think it's going to hit, as we are seeing there are two red 4 hour candles. So there's a chance it might hit. If Bitcoin holds above the zone or even skips it, the bulls are clearly in control. However, if we do get a brief drop, it could be a healthy retest, like a slingshot pulling back before the next breakout. Moreover, what I see for the upcoming days is that the juicy part about all this analysis is the liquidity targets. In the next few days, I expect Bitcoin to push up and collect liquidity sitting just above 119.8, around this level, 119.8k, 120.3k, and finally 120.95, around this area. So these are the 3 points targets that I see Bitcoin reaching. Whether we hit all of these levels in one strong candle or gradually tag them one by one. These are the areas I'll be watching closely. Liquidity zones often act like magnets. The market knows there are stop losses and breakout orders stacked there, and price has a funny way of hunting them down. Let's now, because it's a last daily candle of month, let's see how does a month candle look like. Okay, so month candle looks very bullish. I'm holding off on giving any longer term forecast and until the July monthly candle closes, which is just around the corner. That candle will give us crucial information about whether we are setting up for a breakout or more sideways action. So far, it's looking bullish, enough to justify a new all-time high in August. But, and this is the key, the July candle also has a sell tail, which means that there's a room for potential dip back to the 112 region around here. 112, 113K region sometime in August. In other words, the roadmap shows both possibilities and volatility. Stay sharp, sorry, and stay informed. Anyways, that's the wrap for today. If you found this analysis useful, smash that like button and subscribe to Scard Trader, where experience meets precision. I'll be dropping my full August forecast right after the monthly close. And trust me, you don't want to miss that. Stay disciplined, stay focused, and always trade safe. Thank you.